there's one fundamental basic rule of life, and that most people don't follow it, and they say they do. And that is, you got to do what you love.
Chaps, I am so excited to make this happen. First, thank you so much for joining me in person.
It's a pleasure. Like I said on Twitter, this is the Abbey Road of venture.
You're a lot bigger than in Zoom.
Do you know what? So are you, Marcelo. So I think we have that in common. Listen, I love a good romance and love story. And so when we go back to the beginning of Bicycle and the first conversations, can you take me to those discussions and how that formation talk really came to be?
I met Shu a few years back, who was referred to me as I was dividing SoftBank into two. And a lot of people told me that I should have somebody called Shu join my team. So I called him one day, and your kid was giving birth the same day.
My wife was.
Your wife was giving birth to a new kid. Your first one?
No, second
one. And it was my kid's birthday, so we immediately bonded because that was special.
Our two daughters were born on the exact same day, and that's when we met.
Yeah. So I wanted to have a new talent join what I was doing at SoftBank, and Shu's background is fantastic. He can tell you all about it. And we immediately liked each other. We work well. We decided to open the SoftBank Latin American Fund together. Yeah. And we just had a blast, finding founders, helping make Latin America better. So when it was time to do something new, we both look at each other and say, hey, maybe we should go do something together.
Now, you said you didn't read the questions beforehand. That's great, because I just decided to go off schedule. When you think about yourselves as partners, what is Marcelo world-class at? And Marcelo, what is Shu world-class at?
Marcelo, I call him the master of momentum. Huh. Nobody else generates momentum like Marcelo does. Any idea, any geography, any topic, if you want somebody to get the ball rolling, he'll do it. And it's impressive to see, because often it means bringing together all these different people and capital and spheres of things into one project. It's incredible, incredible. I've never seen anything like it. And so the gift is you just get this momentum that comes from the sky, like manna from heaven, and you have to do something with it. And so I've learned that you get out of the way of the momentum, and then you try and capture that magic and push it forward in an organized way with a team. And we've done that now a few times in a row.
If I just latch onto that, Marcelo, when you think about speed of execution, how do you think about when is the right time to just go fast and momentum is everything versus when it should be a little bit more considered and we need to go slowly to get it right?
Different times, different industries, different investments, different phases of your life. Now is the time to go slow. Now is the time to be wise. SoftBank was the time to go fast. So it all depends what you're up to. And now, once you have something good going, you have to go fast. You always have to accelerate. And that happens to every great company. First you build, you're cautious, you figure out what you're great at. And once you have it, then you press accelerator.
What is Shu world-class at on the flip side?
Shu brings an incredible, diverse of knowledge. Hardly ever do you see an African, a Kenyan, thrive in the US that wants to invest in Latin America. And secondly, he's a great investor, right? I don't think I'm a good investor. I think I can spot good businesses, I can spot good entrepreneurs, but there is a master to invest in. And what I can do is I can bring opportunities and I can then pass them up to Shu, and Shu often analyzes them a lot better than me. He's a little more conservative than I am, so we make a good balance. I think I'm a good operator, and I think Shu is a great investor. And at the end, I believe that the new firms are going to be the ones that have the ability to help entrepreneurs alter the course of their business. I think the days of just dump capital with access are long gone. Those were the days in which capital was free and it was readily available. Today, capital comes at a high cost and is not readily available.
Before we dive into kind of the models of venture in the future, I just have to ask the obvious question. Why Bicycle?
At the simplest level, it's a magnificent technology. Magnificent. It's one of the most empowering things we've ever invented as a human species. The passenger is also the engine. It's a really fantastic idea for technology and what it should mean. So it empowers us a lot, but we have to put a lot of energy in. So that's a core inspiration. But the other is it's timeless. I mean, bicycles look the way it's looked, two triangles and a triangle and two circles for 100 years. And it's very democratic. Any street corner, anywhere in the world, you'll see bicycles changing people's lives. So as a manifestation of what technology means, you'd struggle to find something that embodies that better than bicycles. And in places like Latin America, where the opportunity is the middle of the pyramid, the bottom of the pyramid, nothing represents that better than a bicycle.
Shu came up with the name. And at that point in time, I was in a phase in my life that had become, I started riding bikes heavily. I was training with Lance Armstrong, so I thought Shu was being nice with me. And he's saying, hey, let's name the new fun bicycle. But then you start reading about bicycle and you see what Steve Jobs called the Mac. And that was the bicycle of the minds. So when you combine that with what a bicycle really means, I thought we have a really, really cool name. Plus, Shu and I love riding bikes together. They're amazing. So it all works out.
I think it's a fantastic name, and when you describe it, it really is very powerful, and I love the analogies. I do have to ask, when I think about it, I also think about the cyclist, and you mentioned Lance. I loved his book. It's not about the bike, which is kind of ironic. But my question to you was, when you said about the models of the future being where you really help them build as operators, I actually tend to find that always in the same vein as like a founders fund, the best founders never need me and they just operate in isolation, and I might be there, but they don't need me. How do you respond to the best founders don't need you?
I think every founder will always need something, right? I believe that we're lucky to have had an experience, to have done a lot, right? At least in my career, I'm lucky to have 32 years of probably some of the most diverse experiences that few people have had a chance to build a company that became the #1 company in the world, to merge a company that became the largest telecommunications company in the planet today, the most valuable one. But more importantly, I think sitting at SoftBank for 2 years and seeing so many industries, so many different founders, so many different models, how do you scale, how do IPO, how do you grow, how do you hire, how do you expand, and so on. I think we can always add a little bit, and there will be founders who will ask for a lot, and we'll be there to provide them. And there'll be founders who will ask for a little, and that little might be a phone call that might need some guidance. By no means do we think we know it all, but it's nice. I think every founder that I met, doesn't matter how smart they are and every executive in the world, we've always had something to add. Us, we're lifelong learners, right? Every time we meet a founder, I walk out of that room smarter than I was before because I learned so much from founders. So I think we'll always be able to add a little bit or a lot.
And just to add to that, there's a great quote that was used in basketball, but I repurpose a lot for founders. Average founders want to be left alone. Good founders want to be coached. Great founders want to hear the truth. Great founders do not want to be left alone. And often just having a reflection in the form of a really good board meeting. I'm sure you've been in board meetings that are bad and board meetings that are good. And a good board meeting, even if the founder is world-class, makes a difference for the company. Bota and Sequoia love this crucible analogy. And it's true. There are moments when that discussion, that truth-seeking in a group, even for the best founders, is transformative. So I push back on this notion that founders don't need anything.
I always think advice is slightly rooted in context, if I'm honest. And I think the reason why that kind of mantra is so spoken is because a lot of VCs maybe don't also provide the value that you can. I mean, bluntly, few people can open the doors, have the momentum for companies that you can. I think that might be why. If you are a bluntly tier 2, tier 3 firm, as non-disparaging as I can be, there's little that you can do. Do you see what I mean? And maybe that's where it originates from.
But I'll tell you a big difference about us, right? When you look at Bicycle Fund 1, we're bringing our own capital. We're probably one of the few funds who were bringing more than $200 million of our own money, right? So we're bringing our own capital. We're bringing many years of experience. And we're blessed by all the stuff that we've seen. And we're bringing pretty good contacts, right? We've been in so many different industries. And we bring that to the founder. And I'll go back and I'll say there are some founders who will say, no, I got it. And they will eventually need some help. And there are some founders who will just take as much as they can from you. And doesn't make one is not better than the other one, right? And we're there, we're on demand. And when you bring your own capital, it's a different game, right? Because we're putting a significant amount of our wealth behind every single one of those investments.
How do you think it changes the mindset of investing when it is your own capital?
You're talking entrepreneur to entrepreneur. This is a partnership, right? You're not managing someone else's money. You're managing a certain percent, but this is a big amount of capital, of our own capital. So you're truly a partner of the founder, and that's the mindset that we're going into.
And you stop thinking in bets. It's not about placing bets and having passive beta on tech. It ceases to be these abstract concepts about capital allocation. It becomes very personal, that each relationship is a real partnership. It really matters to you because those returns matter to you personally. And that makes it much, much deeper than just a bunch of bets, which is how a lot of investors have come to think lately.
We'll talk about kind of portfolio construction and kind of slightly financial mechanics in some ways, but I do want to ask, I had Hunter and Satcher on from Homebrewer Fund in San Francisco, and they said the best partnerships are actually where the partners do not need the money when they start, because it actually changes the decision making that can be challenging in a lot of partnerships. Do you think that's right? And do you think being financially independent as partners makes a stronger partnership?
Well, we're in very different phases of our life. I wouldn't call myself financially independent. But I disagree with that. I think caring matters. And the more you care, the more it matters. Second-time founders can be successful if they don't need the money, but first-time founders can be successful if we really need the money. I don't think there's a clean rule. I just think you need to care. And having your own skin in the game makes you really care. That's not a bad thing.
Can I ask, you mentioned also the best founders seek the truth. I think what's very hard is the right way to deliver the truth, how to provide that effective feedback, which isn't always nice. If you were to advise me, I don't always do this the right way. I'm English, so often we don't do it very well. How do you deliver really effective but hard feedback to founders? Neil Mater at Green Oats told me that you guys do it the best.
Oh, nice of Neil to say. Thank you, Neil.
So I'll give you my perspective, and at least from my end, it's easy to talk entrepreneur to entrepreneur, right? I mean, every single great founder has something called healthy paranoia. Some have an unhealthy paranoia, but we're all always nervous on what we're building. And sometimes we think that what we're building is not strong enough, and we're always scared it's going to be the end of the world, and it's a constant roller coaster. And I found that founders have a lot of respect when you've already lived that, when you can walk them through an experience that you have already lived. Every single founder has been in the verge of bankruptcy. Very few have not been. Every single founder has put their entire life to building their company. And it's helpful for them, at least for me, to share experiences, that I learned while I was building my own company. It's helpful for them to understand how we've scaled companies and and last thing I'll tell you, probably the best advice I even give founders is tell them the mistakes that I've made. Because I made tons of mistakes, and tell them, be careful here, because even though it might seem obvious, it's not. And just be blunt with them. And some people like to take it in a board. Some people like to be taken aside and say, hey, this is what I'm seeing. Just be cautious here. And that works, just being honest, blunt, and if a founder doesn't want your advice and you're always going to have to be telling what they want to hear, I don't think that's a company you want to be invested in.
And so if you're lucky enough to have that wealth of experience, that works wonderfully. If you're not, in my case, I haven't built a company. It's much more about listening. I mean, you have to learn from the greats who did this business, right? Don Valentine said the single advice he'd give people is to have big ears, right? Mm-hmm. And that's the most important thing. Listening, asking the hard questions, but not necessarily pontificating. Sometimes a boardroom can turn into a bunch of people speaking their mind. It's much more about finding the question that can really make the founder pause and think and potentially make a good decision.
Can I ask a hard one? Do you think there are any areas of misalignment between founder and VC?
Yeah, often. I mean, VCs want to mark up the company. Often that's the goal, especially if you're at the early stage, right? You want the A to be lower than the B by some margin, and then you want to raise a new fund on the back of the B or the C. That's a very different goal from the founder's goal, which is to build a lasting company. At the growth stage, it tends to be less the case because the markups are not fast and furious the way they are at the early stage. So I would actually think the later you go in a company's life, the more aligned you are with trying to create something that's long-term durable and successful, because you can't hide anymore. It's not about the markup. It's about whether you have a real business.
Marcelo, yeah?
Same. And we've learned the hard way.
Can I ask one? I have to ask this one, which is, you mentioned the mistakes that you often tell founders. Is there one common one that you find yourself saying more than others? A mistake that is the most commonly told for you, where you find founders most resonate with it?
So what I've learned from founders and from myself is, trust your gut. You know the answer. In many cases, I've seen so many board meetings, VCs who've never built businesses or who've never been around great businesses. Everybody gives advice is cheap, it's free, right? And many founders sometimes get confused. At the end, a great founder, you know what they'll do? They're going to listen to all of us, but at the end, they're going to trust their gut. And their gut is 90% right. And when you go back to them and say, look at the last 10 decisions you made, and which ones were yours, and which ones was because you listened to the last person that talked to you, you realize that most of them are always right. That's why they build great companies. And by the time we get to in the growth stage or in other areas of our businesses, they've already have a proven business model. They already know what they have to do. So that's often that's often the case, that they sometimes don't trust themselves and they listen to others. And at the end, listen to others just so you can check that your gut was correct.
I do want to discuss Bicycle specifically. We had the fundraise announcement a couple of months ago, I think it was.
A couple of weeks ago.
A couple of weeks ago.
Yeah.
Time flies.
Time does fly.
And my question to you is, it was mentioned as growth equity, and it's a $500 million vehicle. Can you talk to me about the focus, where it is specifically, and how you view that both from a stage and an insertion point?
The answer is very specific to Latin America as well. Mm-hmm. So there are a lot of really good early stage funds in Latin America. Some local, some foreign, but it's a solid base of early stage funding. And then crossover funds, once you get to the D or the pre-IPO round, they always show up. If a company has good numbers, they will show up. The gap is in the middle. So starting at the Series B, it's a bit of a desert in Latin America. For a few years there, from 2019 to 2021, it was not a desert. Yep. And in 2021, notably, venture went from something like $4.5 billion a year to $16 billion a year. Now it's back to less than $1.25 billion. So we're back to the 4.5. So there's a real gap in funding at the B and later. And the B tends to be the trickiest round because you need some meaningful amount of capital. The A can't lead the B. They could do maybe some pro rata in the B. So you really need someone to step in and lead the round and price the round. And there's still some risk in the business. That's the real opportunity. And then, of course, you get opportunistic stuff at the C and D at good prices, maybe some secondary here or there. So that's the gap that we want to fill with the fund. That's a product, so to speak, that founders don't have, and that's a product that LPs can't buy today, which is growth exposure in Latin America.
Can I ask, is the fund size big enough? If you think about a Series B being 40 million, say, 30, 40 million, and you want to lead a Series B, it's 25, 30 million check from you. Is that big enough? You've got 12 to 14 checks in the fund.
It's a start, right? We didn't have a lot of time. We had an idea of what we wanted to do. Yeah. I had a non-compete. Our non-compete was announced, the end of my non-compete was a couple of weeks from when we announced the fund. And to be quite honest, we haven't even fundraised yet, right? It's Mubadala, who wanted to make a bet in Latin America. And we've known Mubadala for a while, both Shu and myself. And then we called 5 other LPs. We made 5 phone calls, and the 5 of them said yes. And it was my family office. So we really haven't started. But what we want to make sure is this time around, we don't want to be the biggest. The biggest doesn't necessarily mean you're the best. We want to get started. I think 500 million, maybe a little more, is a good start. And then we'll see where it takes us. But I think we're lucky. I mean, we're grateful to be able to pick up the phone, call 6 people, and raise a fund, which is probably the largest first-time fund launched in Latin America. And I think in this time where nobody's raising money or very hard to raise money, to show up with a 500 million fund a couple of weeks after your non-compete expire, we're lucky. We're blessed. We're grateful. A lot more will come. I mean, we have big aspirations, but we need to deliver. You win a game playing minute by minute, and we got to deliver the first few minutes, which is this.
Can I ask, when you say the biggest isn't always the best, you deployed $7.5 to $10 billion. There were different numbers that I saw, so I'm not sure which one it was, but $7.5 to $10 billion. Sorry.
7.5 through the Latin American fund, and it was 2.5 billion through the other Latin American.
Okay, so combined we have 10, but 7.5. With your time with SoftBank, what were some of the biggest lessons from that deployment period?
Different times, right? At that point in time in SoftBank, the mandate was to build a portfolio play. Right? I wanted to make sure that we were investing into most successful technology companies. That was the mandate of SoftBank. And I wouldn't call it unlimited capital, but we had a significant amount of capital. So that was our job to go deploy that. The Latin American Fund, Fund 1, is a very successful fund and will continue to be very successful because we were able to fund the best Latin American companies. This time, it's all about quality and not quantity because we have a different amount of capital available to us and because we need to make sure that the returns that we provide are absolutely the best. So we're a lot more cautious in terms of which companies we're going to invest and which founders we're going to back and how we're going to allocate our time. Because I do believe that we can add a lot to the course, to altering the course of a lot of the great businesses that are being funded in Latin America.
And that 12 to 14 that you mentioned of number of companies is a feature. It's not a bug. We want a small portfolio in the first fund. We want it to be personal with every single company. We'll only invest in companies that are excited to have us as investors. We're not fighting to get into rounds. If they don't want us, it's okay. We don't have to be in there. And so knowing that it's only going to be 10 to 14 is really clarifying because that means an investment a quarter. So it has to be real mutual love to do that. And if it's not, it's okay.
How do you want to build the firm? You can build firms in different ways. Your insights on one with huge teams and your benchmarks on another. When you think about the firm that you want to build with Bicycle, it's something that I think about a lot with 20VC. What type of firm do you want to build?
I'll start and Marcelo can complement. We're lucky because we have 3 people who joined Bicycle day one who we've worked with for 4 years. And they've been part of the journey from 2019 with the SoftBank Latin America Fund. So there's already a lot of inbuilt tribal trust and knowledge and way of working together. That's the core. And that core is very important because there's a shorthand in how we communicate. We all have the same general ambitions. People come from multiple different places. It's hard to imagine we're going to get dramatically bigger than that. The nice thing also is it's a whole spread of ages. So we already have the seeds of a multi-decade firm now. Our goal is to not screw that up. Right? You have to build capability sequentially over time, but not damage the core that got you started.
So I want to make sure that the team that I've put together is the best performing team, right? At the end, I need to see Shu and the investment team. I'm the oldest one here, right? And I need to...
Great skincare routine. Yeah. This is the answer.
I need to make sure that Shu and team don't make the same mistakes I've made. And at the end, they're going to be running the fund. I'm the chairman of the fund, and I just got to make sure that they don't make the same mistakes that I made. My dream is for this fund, for them to just run this fund alone and let this be fund 1 of many more to come. Because I think Latin America, people often underestimate Latin America. I was having lunch with a very prominent Indian businessman. And Latin America, if you add the GDP of Latin America, we happen to be 2x India with 1/4 of the people or 1/3 of the people. So Latin America has the size, has 600 plus million, a big population. So there's a lot to be done in Latin America that we just got started at SoftBank. And the few success stories that you have today have given birth to a lot of other hopes, dreams that are in the process of being made, new journeys that are being made, because now Latin America has a lot of histories of success, right? You look at Nubank, great example. To me, the world's best digital bank. Look at Mercado Libre, nothing to envy to an Amazon or to an Alibaba, etc.
You look at Globant, which is real software building shop from Argentina that serves clients globally, not the sort of thing people associate with Latin America. So different kinds of companies get created in the region.
And the market.
Surprising to most people.
The market is amazing. When we were investors in Uber, we had to keep it a secret that after New York, 3 out of the top 5 cities were Latin American cities. Latin America, the economy is one that will take on any new digital disruption at an accelerated pace. Look at Netflix, WhatsApp, and all that.
You mentioned TikTok.
Latin America is a huge market for them.
It's been unbelievable for us in terms of LATAM audience growth.
SHEIN. Latin America is absolutely booming, right? So it's great to be in a market where it's the early stage of entrepreneurship, but with great founders, but also you have a market that's ripe for consuming any digital good at an accelerated pace.
Before we dive into LATAM, I do just have to ask, on the firm itself, what do you think is the biggest challenge that you're yet to prove out? So an example, like when I think of mine, it's like I can build a firm beyond myself. Every fucking LP asks that. How do you think about what your biggest challenge is in terms of the firm build ahead?
I think it's really tied into the region. Nobody doubts that you could create a growth equity firm in this day and age.
Sure.
Lots of people have done that. Question is, can LATAM support a multi-fund growth equity firm? We strongly believe the answer is yes. We think it's obviously yes. But that's something the rest of the world doesn't quite believe yet. And so it'll take time to prove that out. And in a sense, that makes the task very simple. We just have to execute. We have high conviction in what we're doing. We just have to put one foot in front of the other. And the proof will emerge over time. And that proof is in the form of big outcomes. So you want the next new bank to go public in New York. Like that'll kind of quiet the critics. But it's getting over the regional argument, really, because we're very tied into the story of Latin America.
It's a misconception about the region, right? I mean, you ask some people and they think, oh my God, this is the land of drug trafficking, high inflation, and constant political turmoil.
Soccer.
And soccer, which is great. Football, for you,
Football,
sure.
Yeah.
It's the opposite. Latin America is, to me, the land of opportunity. And I think Latin America is the only place which is great because there are more opportunities than capital available. Everywhere else, there's more capital than opportunities available, which drives crazy valuations and others. So I think we're in a great place. We understand Brazil, we understand Mexico, we understand Colombia, which are the three largest markets. And I am a huge believer in the macro story of Latin America. And I think the next 10 years are going to be the best 10 years of Latin America for two very, very simple reasons. One is nearshoring. I mean, long are the days where companies will have one supply chain and be only China. And if you want to serve the other side of the world, Mexico suddenly becomes a place to serve the US. So nearshoring, it's real, very important. And secondly, commodities are going to be an important part of the whole new energy model or the electrification of the world. And few people know that between Bolivia, Argentina, and Chile, that's 60% of the world's lithium. It means that's Bolivia alone is 1/3 of the world's lithium. So suddenly, the prices of those commodities are going to be steady for the next 10 years, and Latin America is sitting on that. I don't know if you know, but Brazil will become the largest food exporter in the world. So all that means is these countries are going to be, I would call them economically sound. I'm not going to say they're going to thrive because a lot of people have said that and made mistakes, but I feel very good about the future of the economy of the two most important markets in Latin America, which is Mexico and Brazil.
Can I ask?
It's nice to have tailwinds, and they have tailwinds.
Everyone needs a tailwind.
Everyone needs a tailwind.
One thing that I'm always struck by is the difference of opinion I get on homogeneity of LATAM, where some people kind of block it together and go, LATAM as an opportunity is this huge opportunity, and look at the kind of collective audience we have here of 650 million, and it's basically whatever we want to choose, this huge market. And then others say, no, it's incredibly fragmented. Each country is very individual. It's much more European in its structure, where you have to win Mexico, Argentina, and you can't look at it as a kind of block opportunity. Which one's right, do you think?
Well, for sure, there's Brazil and everything else.
Yeah.
And Mexico.
But even language is different in Brazil. So you have what's generally called Spanish-speaking LATAM, and Brazil, which is not Spanish-speaking. Brazil is its own beast. Mexico is also a large entity within Spanish-speaking LATAM. So if you were to disaggregate two countries and pull them out, it would be Brazil and Mexico in that order. And if you ignore everything else, those are huge markets. That's more than half of the population of 650 that Marcelo mentioned, and most of the purchasing power. And two very well-run central banks that have performed incredibly over the last 2 years. The currencies of Brazil and Mexico have been some of the best performing currencies in the world because the central banks hiked early. Brazil is already on the phase of easing interest rates. So these are two really interesting economies with tailwinds. And then you have, as a plus, some of the other markets. Some will always be challenging. Argentina has perpetually been a challenging market. It's never gotten currency under control. It's very difficult to figure out what the value of your peso is over time. Colombia is having a challenge now, but we're long-term bullish on Colombia. But if you really had to focus, it's Brazil and Mexico. And in a sense, I suppose that would be like Germany and France. You know, if you want to pick the EU example, I'm sure in Europe there's a similar answer to that, where here are the two markets that really matter. And the same is true in Latin America.
But I will add two things, right? It is expected that both the Brazilian and the Mexican economy will be among the top 10 economies of the world. So it's nice.
Top 6, yeah, 2050.
Okay? And then secondly, Argentina is great because in Argentina, you have something that you can export, which is services, people. The amount of engineers, the amount of lower price labor because of inflation and others. So I look at, Argentina, that's why you have created companies. I wouldn't say that's why. I think they're great on their own, global and all over the world. But that was the beginning. And I think that if you can play in two of the top 10 world's economies and be strong there, right? I think you can build a great firm around that.
If we think about, you mentioned the services and the amazing talent, if we kind of go up the stack or down the stack, whatever way we want to take it, but to the kind of financing, we saw the evacuation of kind of foreign capital in the last year with the kind of economic changes that we've seen. Is that a good thing for you or not? In a way, there's less competition, fantastic. And also in a way, there's less financing available for LATAM companies and less co-investors. How do you analyze the foreign capital withdrawal?
It's a balance sheet. There are pluses and minuses. One of the biggest minuses is you have big pref stacks all over the place. All these companies that raised a lot of capital, whose valuations right now should be much lower than the round they did in 2021, who have pref stacks that are underwater. And it's very difficult to finance those companies even at a discount, because what are you buying, right? If you're buying secondary early A shares or common shares, then you're under this huge pref stack. So I think that's a very big negative. The positive is there are fewer people competing and prices have become much more rational.
To me, I love it. Right? There's tourist capital is done. Which is great. This is left for people who understand the market, who understand the opportunity, who are really going to help entrepreneurs. So it's better, it's cleaner. It's people who, there were people who showed up there in late 2021 because they were like sheep, right? SoftBank was leading the way and they all came behind. I think there's going to be left two great ones. I have a lot of respect for GA. If you look at the returns of GA, people often don't know, but if you truly study GA, the great returns have come from Latin America.
It's very funny. I just got off a call with Martin Escobari, and he said exactly the same thing as you did in terms of the tourist capital.
So it's going to be GA. Hopefully it's going to be us, right? And then the rest, they don't even know what the capital of some of these countries are. So it's great. We like it that way, and hopefully it will stay like that. I want people to be busy thinking about the US, thinking about China, thinking about Europe, and we'll do our thing in Latin America. We're going to help entrepreneurs, and we're going to go help and build some of the most amazing companies that they're proven they're capable of building.
And we like to be collaborative. So there are other firms. QED has had a presence on the ground for a long time. Yeah. Warburg has a presence on the ground. There's a new firm that spun out of GIC that has a presence on the ground. Temasek, sorry, not GIC, that has a presence on the ground. We love to co-invest with these firms. I think the A is where the elbows are sharpest. Yeah. Seed, you get a lot of people coming together. Growth, you get a number of people coming together. And so we're happy to be that catalyst for other capital, whether it's local or foreign, but we want to price it, we want to assess the risk and bring other capital to the region.
How important do you think it is having feet on the ground, being there, having offices in the cities?
Extremely. There's a lot of adverse selection. There's some founders who might or might not be great, who play really well in New York and San Francisco. And so if you wait for them to come to you, that's all you'll think Latin America is. Yeah. We were just in Brazil, and we went to the middle of Brazil, to a state called Goiás, to a town called Goiânia. I don't know how many investors have been there. They said we were the first ones to go visit them at their offices. Really interesting company. Those folks are not going to New York to raise capital from 57th Street. You have to go and find them and build a relationship.
I love that.
And you have to understand what Latin America is all about, right? You have to have lived in Latin America, and we have a good group of people who live there. You have to understand, how people think in Latin America if you want to be a great investor. You got to, in many cases, speak their language. It's not about just showing up in Silicon Valley. I'm a believer that those days are long gone.
I'm naive, Marcelo. How do they think differently? If I could describe how Europeans think differently to US. If you were to compare US to Latin American people, how do they think differently?
We have different issues, right? Our education is way worse. Our health systems are broken. So anytime you bring technology to help you with health, it is people adopt it extremely fast. Education in many cases is pretty bad. So suddenly when you start bringing online learning methods, it's really, really helpful. Transportation was broken. This is why Uber exploded. The way retailers used to mark up their goods made it so expensive that they were charging interest rates up to 80%. So when the day that SHEIN shows up with something that's 70% cheaper, guess what? It grows beyond what anybody can ever dream of because you're solving people's needs. It's a different approach to solving. You have to understand what are the problems so you can solve them. And I think we have a deep understanding of that. And this is why we can partner with these companies and help them grow their businesses. And it's very different. And I think that's why founders like us. And you will see that in investments that we're starting to make, are founders who truly appreciate the experience that we can bring to help them.
And on the other hand, you have a lot of different kinds of sophistication. I was just in Scarsdale, New York, and I tried to buy a bagel, and they said, sorry, cash only. In Brazil, that's a laughable statement. Nobody would say cash only. You pay instant real-time transfer from your bank account to the merchant's bank account using your phone, everywhere. And Latin America has something like 25% of the world's fintechs. 25%, a quarter of the world's fintechs are in Latin America. Brazil is probably the most sophisticated financial market I've ever come across. You can securitize any stream of cash flows and sell it to the market tomorrow, and it'll be purchased and distributed and bought by investors. So these levels of sophistication are not really understood outside of LATAM. And so you'll come across a company in Brazil that is very capital intensive, but most of it is debt. And in Brazil, that's not a risk because you can actually raise a lot of debt really easily through a bunch of different avenues. So as long as it's not equity intensive, it's still an interesting capital efficient company. But that's more difficult to explain to somebody who hasn't spent time there.
You said about 25% of the world's fintechs. I spoke to David at Nubank before the show also. Clearly I have far too much free time to be doing all these references. But
fun people to talk to.
They are pretty cool people to talk to, I have to say. But when we think about kind of liquidity, and it's often another, not criticism, but challenge discussed about LATAM and LATAM investing is where's the liquidity? Nubank is one that has kind of proven immense amounts of liquidity. dLocal, another, but not huge. How do you think about the liquidity challenge / opportunity, and how do you evaluate that and discuss it internally?
Well, so there's a lot missing from the examples you just gave. For example, local listings. Brazil has a very deep liquid capital market, extremely. There are a lot of tech companies public in Brazil, and they've made investors a lot of money.
So I'm naive. How big are they?
Multi-billion.
They're a multi-billion.
Yeah, from 500, you get a lower scale to be viable as a public company in Brazil than you do. You don't want to be a sub-billion-dollar company on the NASDAQ. You'll be a rounding error for people. But from, 500 million up to a few billion, you can list very comfortably in Brazil. And the other is M&A. Pismo just got bought. It's a Brazilian company. I'm not sure if you've heard of it. Yeah. They make financial infrastructure for banks. And they've been bought, arguably, I think it's by Visa. That's the rumor. There are a number of companies from Argentina that have been bought. Okta bought an Argentine company, for example. SoFi bought an Argentine company. All of these are companies making technical infrastructure, often in financial services. And LATAM is a bit of a center of excellence for that. So liquidity doesn't have to be a big listing on the New York Stock Exchange. It could also be local listings, and it could be M&A.
Do you not think it does? Sorry, I'm pushing, but friendly.
Yeah.
Do you not think it does have to be if you want to fund returner, if you want to have scaled returns?
Well, it depends on your entry price, and you need some exits that are big on the scale of a New York Stock Exchange, but you don't need all of them to be that.
You don't?
Not all of them, no.
What do you think, Marcelo?
I think it's a market in evolution. I mean, it's nice to have a local market in Brazil that is growing fast, and that's a very innovative market. So that's going to create some liquidity for some of those companies. And it's also nice that NASDAQ will remain open to Latin American companies that have proven scale that they can grow. And that's the case of a new bank and all that. And I think there'll be a few IPOs coming of some great Latin American companies. Again, that makes it a lot more challenging, right? Which, again, there's going to be few players, and that's what we like, right? I mean, if you're going to be just another investor opening a new fund into something that's already been done many times, like in the US, that doesn't excite me. What excites me is to go help build an entrepreneurial landscape, which we started with SoftBank, generate sufficient exits, which are starting to happen, which happened in the last couple of years. And that's going to create other people who can dream that they can do the same. Latin America is under construction, right? If it was already built, there'll be other people there. And we're builders. We love that. At least that's what excites me. I made a commitment to the next few years to go deep in Latin America so we can equalize Latin America. And that's our mission.
And there's a presumption, you talk about fund returners. Growth is different from early stage. Not every investment has to have the potential to be a fund returner. You could have every investment have the potential to be somewhere between 2 and 4x in growth, and that's great. So if you speak to LPs, the exposure they're looking for in growth is pretty different from the exposure they're looking for at the early stage. So we don't underwrite to 20x or 10x potential for every investment. It's much more modest than that, but it has a lot less risk.
So loss ratios, how do you think about loss ratios as part of that? I'm an early stage investor. My tolerance for loss ratios is 50% plus in some cases.
As we said, this is going to, as you said, actually, it's going to be a 10 to 15 company portfolio. Now, ideally, none of those go to zero.
Yeah. You said a brilliant thing, which is like, South America is under construction. What do you think is yet to be constructed that needs to be constructed in the next 3 to 5 years?
We have a great Series A, seed, amazing funds. I mean, I have so much respect for funds like CASEC, Monashis, Valor. They've done great. And in a way, it's good for us.
Sure.
Because they're eagerly awaiting our arrival so they can partner with us because they know where they play. Yeah. And we respect where they play. And we don't have that knowledge to go play in their space.
And you don't want to go down into that space.
We try not to.
Yeah.
Once in a while you dabble because you find, an incredible entrepreneur with an incredible idea, and I dabble, and then Shu reminds me where we're supposed to be. But we don't. And I think, that's what you look at the bottom, very well covered. Series B, Series C, GA, ourselves, QED, and a few others. And now we need, the pre-IPO and the IPO rounds. But I'll tell you something, you're never going to get there unless we're successful. We need to be successful in B, C, and D in order to create that IPO market. Because for great companies, there's always going to be rooms for IPOs, right? Call it in Brazil, call it in the US, call it in London, call it everywhere. But we need that piece, the piece that's missing, the piece that we're going to go attack in order to create those companies that are going to be ready to do an IPO. So it's not about the market. I think that's a misconception. There's no big market. No. We haven't had those companies yet, that many, because there wasn't, that sort of investors, which is what SoftBank started. And we sort of have an obligation. Like if you ask me, why are you doing this? I felt we started something special at SoftBank. And then suddenly when SoftBank decided that they don't want to focus there, it left a huge vacuum. And I personally feel that we have unfinished business that we need to go continue. So it's more than just going and deploying capital and generating good returns. To me, I set a goal for the team in SoftBank, and that was we need to equalize Latin America. Latin America had the lowest percentage of venture investing as a percentage of GDP of whatever than any other region in the world, I think as close to Africa. And with SoftBank, we started something special. We equalized Latin America, and suddenly that's starting to fade. So we need to get back there. And 500 million is a good start, but we're going to require a lot more in the future, but we got to get it started somewhere.
The other thing that's needed is talent, and that's changing a lot recently. So 2 sources of talent in the ecosystem. One is successful companies spawn talent. Rappi is one of the largest contributors to Y Combinator in terms of alumni. Rappi alumni becoming YC companies, one of the largest contributors within the YC universe. That's pretty stunning. It's a Colombian company that went through YC itself. So that virtuous cycle happens every time a company gets big enough and spawns a bunch of talent that kind of knows how to build. The other is foreign talent going to LATAM. We've seen all kinds of people, whether they're working remotely or they move full-time to the region, working for companies in Mexico, in Colombia, in Brazil, because they're exciting, they're interesting. It's better than being the 20th employee at another SaaS company in San Francisco. And that changes the level that people are executing at in LATAM.
Can I ask, we mentioned the many references that I did. Literally every fund that you mentioned there in LATAM, I spoke to kind of the GPs there, and a lot of them asked a question which I wasn't sure if I was allowed to ask, but we'll ask it and we'll see if I'm allowed to. And they said, when you look at the investing period with SoftBank, what are the biggest mistakes you think you made that you're looking to correct with Bicycle?
That's a fine question to ask.
I'm British. It's very uncomfortable. This is why people like coming on my show. Most journalists are.
So the investing business, as you know really well, Harry, I mean, you've been doing this for long enough. The investing business is a mistakes business. It's all about making mistakes, because then you find really good things. So you can't not make mistakes. I think the opportunity we saw was a lack of capital, and we tried to pursue that aggressively wherever we saw a lack of capital, and tried to build a big support organization to help the companies after we invested. That worked for that scale, but I think the smaller, selective, more personal touch, trying to change a company's trajectory one at a time, is a better approach for a region that still doesn't have the full ecosystem maturity. So that's the most fundamental thing I'd change. I think slightly smaller is better for LATAM.
What would you say, Marcelo?
Be more selective. As I said, SoftBank was a portfolio play.
Yeah.
This is about choosing the winners with trying to avoid any big losses. And the way we're investing in these companies are ones in which I think we're going to minimize the losses. And we're not aiming for, 10x, 20x. We want to make, if you understand the concept of baseball, which some British people do.
Oh, I've seen Moneyball, don't worry.
This is about hitting doubles or triples in the first fund. This is not about trying to invest a significant amount of capital to generate, a grand slam. And we're very cognizant of that. We want to make sure we have no choice than to deliver a great fund, because this is the first time fund. And as you know, you're as good as your last fund, and we need to make sure that this is a great one.
How long do you think it'll take to invest the first fund?
Oh, a month and a half.
2021, baby.
Well, vintage matters a lot. It's a tricky question because 2023, 2024 should be very good years to deploy capital, just statistically speaking. Yeah. But you have to resist the urge to over-deploy, especially at the beginning when every company is exciting. And so we have to pace ourselves. I would imagine something like 3 years.
Yeah. No, I totally agree. Now, before we move into a quick fire, we mentioned a conversation before the show, and it wasn't in my notes at all, but I really enjoyed it. And so I'm going to ask it anyway. Often we think and we hear about kind of work-life balance. And one thing that the reason the show's successful is because I bring my own life into it sometimes, is like, I'm terrified of losing an inch on work with the expansion of personal life. I wanted to ask you, how do you think about having a personal life, having a family, and still excelling in what you do and the strategy and the execution with Bicycle? What advice would you give?
I'm going to embarrass Marcelo here. One of the biggest things I've learned from him, he has this wonderful quote that I saw in Tokyo first, and then it travels with him. So clearly it matters.
Travels with him.
I see it in every office. And the general gist of this quote is, work and play are not different things. They are the same thing, which is life. And that's a beautiful concept, because there's not this partition of what you do and who you are. It's all of one piece. And Marcelo's wonderful quality is it's always happening together. So whether it's family or work or play, they coexist. That idea of coexistence, I think, is a really powerful one, and it enriches each of those spheres. So I've learned not to try and draw sharp boundaries between now I'm working, or now I'm at home, or now I'm playing. It's just life. And the beauty of doing something you love as much as I love this particular job is it's not some other thing you're doing other than your life. It's a hobby, and it's a job, and it's a passion, and it's okay if it seeps into your family.
Can I ask you a really hard one? What if your work is who you are? And I know that sounds like we're taking this into a therapy session, but like, you asked me how long I've been doing this. I've been doing this for 9 years. I was 18 when I started. I've never traveled. I never studied in university. I've only ever known my adult self to be this. I don't really... my work is who I am. It is my identity. What do you say when play and like life, it's all just that one.
It's a phase, right?
Yeah.
Sometimes people ask me, like, how do you do this? Because I'm in a different country every day and I'm traveling constantly. And there's one fundamental, basic rule of life. And that most people don't follow it, and they say they do. And that is, you got to do what you love. I mean, if you love your job, that's your life. But that doesn't mean your family doesn't come into it. I'm here, I'm in London, I'm on holiday. But it's a combination of, I don't know, taking my kids to Wimbledon yesterday, walking around the streets of London this morning, by being here with you, having dinner with our LPs, and it's one of the same. And it's it's every day, every week is like that. It's a combination of my kids being at work, or when I travel, I usually take one or two of my kids, and sometimes I'll go visit a company. I say, hey, do you have an extra room? Let's put my kid there so he can play on his iPad while I'm doing this meeting with you. And then I take my kid to grab an ice cream in the streets of Sao Paulo. If you're truly happy and content with what you're doing, you will bring your family into it, and your family loves that you're happy. So therefore they're happy, and you make them happy at the same time. So to me, there's no such a thing as a work life. It's one of the same. There's no Sunday for me. Sunday's as good as a Monday, or I might take a Tuesday off and I might work Sunday. I mean, just to me, as long as I'm happy what I'm doing, I will give it all my best. And most people are not. And that's where they struggle with this division where, okay, work finish, I start my life. There's no such a thing. If you're happy, work and life are one of the same.
Can I ask, do you think that's a luxury of being very successful already? Like, you can go into anything and say, oh, my kid's here, my partner's here, and everyone will kind of bow and give their house and any room that you need for your child to play on their iPad. Like, when you are more junior or younger, you almost feel guilty for bringing them along, for integrating them. Does that make sense?
No,
you don't think that's true?
No, I've been doing, at least for me. I mean, and my life's not similar to a lot of people. But hey, I was a struggling entrepreneur, and it was the same thing. I mean, it was, we used to have the staff meetings in my house, and my employees became an integrated piece of my life, and I became an integrated part of their families. And so I disagree. Obviously, you got to keep boundaries, right? I mean, don't show up with your kids to a board meeting and sit in the same table, because
don't ask my opinion.
That's not going to happen.
They might be more helpful than the VC, and then you're really screwed.
I think if you're vulnerable to people, and hey, we're all normal people, right? I mean, we all got kids, we all got problems, and just bring that on, because I don't know. At least I found that the combination of bringing work and your normal everyday life together, it allows you to maybe execute better. So I don't feel I'm losing an inch.
And one thing I've learned in my fewer years on this earth, there are no rules. We're born into a context, and we kind of look around and say, okay, I guess those are the rules. But the reality is there are no rules. And so you just have to do what works for you, and ignore the advice and ignore the noise, and just make it work for you.
I love that. And thank you for that.
Create your own path. Don't follow everybody's footsteps,
because nobody knows what they're doing.
And then you're going to be another one of them, and you don't want to be another one. You didn't build this podcast or what you're doing right now by just following the normal routine. This place where I'm now is not a normal
office.
Imagine if you were a normal guy, you wouldn't have the amount of followers that you have.
This is true. It's the shorts that do it, actually. Yeah.
They're in now, though.
Yeah, they're very in. My question to you is, I think having the hard discussions is the most important thing. When you think about having the hard discussions as a partnership today, how do you have them? Often people say, have them straight away. It's the right time to do it when you feel it. How do you think about having the hard conversations between...
Make it personal. We had a third partner.
Yeah, we've had hard discussions already.
And we were only two partners. And we were three when we started. And it was those hard discussions that made us be two. And Shu and I have difficult discussions, but we learn to compromise, right? And I'm a tough person. I usually like it my way, but I tell you that Shu and the other partners that we have taught me that, hey, listen to others. And if lately they're changing my mind more often than ever before. And I think that's what partnership is all about. It's you got to bring your opinion, you got to bring your boldness, you got to bring, and at the end, compromise works in a marriage, compromise works in a partnership, and I think we're building a relationship of compromise where we respect each other's opinion incredibly well, even in our investment committee meetings, where I might have a high level of conviction, but if my other partners don't, I'm going to retrench. And I've done the same. I've been able to convince them of things that at the beginning they say no way, and I think that's what is great. Like there's nobody's the owner of the truth in our firm.
And back to the idea of following your gut that Marcelo mentioned earlier. I think you always know when a discussion is going to be hard. Your body tells you because you don't want to have it, and that's the strongest signal that that's exactly the conversation that should happen. So you have to go into the difficult places that your body is telling you do not want to go to, whether it's discussing an investment or discussing something about the partnership. You're always getting these signals about what you should be focusing on, and that's what you tend to avoid. But it's a very strong indication that that's exactly what you should do. So you need a bit of courage just to listen to yourself and not be afraid to say whatever instinctively you feel is important without having a fight about it, which is the nuance.
What was the most recent difficult discussion that you can remember?
Well, it was about the partnership. So it was a difficult one to go from 3 to 2, and it took a lot of time and lots of difficult discussions.
Are we ready for a quick fire round?
We are.
Okay, let's do this. So I say a short statement, you give me your immediate thoughts. We're going to start with you, Marcelo. Let's do, what's the biggest challenge ahead, do you think, for you with Bicycle over the next 12 months?
To convince the world that Latin America is a great place to do business in.
Shu, what have you changed your mind on in the last year?
I think peace is overrated. So just being very practical, I think big markets matter a lot. And I come from Kenya, right, which is a $50 million people population. If Kenya was 150 million people population, it would be a completely different story on the world stage. And so Kenya and Uganda and Rwanda and Burundi and Tanzania and Ethiopia just need to merge. We need more M&A between countries. And I think that's way more important than this idea of sovereignty that everyone's obsessed about. So I think sovereignty is overrated. I shouldn't say peace is overrated. Sovereignty is overrated. We need more country M&A.
That's the title. Marcelo, what's been your biggest lesson from working with Shu? How's working with Shu changed how you operate?
He's more calm. He's more thoughtful. So I'm learning to think a lot. I'm a lot more thoughtful working with Shu than other people because he has a strong opinion on things.
Shu?
The inverse. I've learned to respect the momentum and the instinct and not to resist it and to really channel all that energy in a productive way. So Marcelo brings a lot of really, really special stuff and you can't get in the way of it. You have to channel it. So that notion of channeling.
Marcelo, who are going to be the biggest winners in venture in the next 10 years?
Those that can help companies alter the course of their business in a positive manner, not those that can have access to deals.
Shu, harder flip side, who are going to be the biggest losers in venture in the next 10 years?
Well, it's easy to answer with the opposite of that.
I know, isn't it? Sorry for that.
Passive beta capture, this whole idea that you just buy an index of tech and you sit aside and let it perform. I think that's gone. I think you have to be a stock picker. And so people that are just trying to place a range of bets, I don't think that works. Even in things like AI, I think the surge into AI now, just we have to place a bunch of bets. I think that's wrong. I think you need to pick. Just like if you placed a bunch of bets in search, but you missed Google, it wouldn't have mattered. It was the right idea, but you really had to have picked Google. You had to have picked Amazon. So I think picking, those who resist picking and instead go for big trends will lose.
I do agree. If you could choose one board member, Marcelo, that you could have to sit on a board of your company, Bicycle, you name it, who would you have?
Dead or alive?
Dead or alive?
Steve Jobs.
Why Steve? For you?
He's probably the most intense individual I've ever met in my life.
Take me to this. Sorry, I have to ask this. Take me to this meeting. How come the meeting with Steve Jobs came to be?
So back then, I used to own Brightstar.
Mm-hmm.
And I had an idea of how could Apple actually double their sales. And after many emails to Steve Jobs, which he wrote me back, no interest. One day he got tired of everybody pinging him that he had to meet me. So he agreed to take a meeting. And that's how buyback and trading of mobile phones got invented. The whole idea of telcos make you sign a 2-year contract. Apple makes new technology every year. The only way you get people to actually get their technology every year is by buying back their old phones. And that's something that it took a very long time and some pretty intense meetings of somebody who absolutely seek perfection in everything that was done. And it was just fascinating to me to learn of how you never settle for less than 100%.
I love that. That's a fantastic story.
And that's how buyback and trading got invented.
I love that. I did not know that.
Yeah.
Shu, again.
Question. I'm going to pick Neil Shen.
Ooh.
He was a banker. He was a founder. He was an investor. He's an incredible investor. I mean, Sequoia China, I don't even want to guess at the returns, but it's an absurd series of funds, Hall of Fame series of funds. And he's managed to play this incredible role in the Chinese ecosystem, elevating the ecosystem and making great investments at the same time. I just think that wealth of knowledge and experience would be incredible.
I totally agree. I think Neil is awesome. So a line there. Marcelo, what's your biggest miss and how did it change your mindset as an investor?
Probably Nubank. We didn't get there earlier on and we were stubborn. We were stubborn in evaluation and the founder was more stubborn and the founder won. And I think now, at the end, I'm a huge personal investor into Nubank. I got SoftBank to be an investor into Nubank, but we were so new. I think it was our first week, and we just said, no, this is it. And we were wrong. So I always tell people it's hard to say you're a great Latin American investor having missed Nubank at the beginning. And I say it publicly. And we bet on another horse, and that horse didn't perform as well, as Nubank did. So I made a lot of bad investment decisions in my life, but that one bothers me because it's within my region, it's within my knowledge. And if there's one thing that I learned is don't be stubborn, and I was very stubborn.
I love that. The first week, you're always going to be disciplined.
Exactly.
Yeah. Missing the good ones is as bad as investing in the bad ones. Maybe worse. I was going to say Nubank, but now I can't. Probably OpenAI. So when we were at SoftBank in 2017, I think thereabouts, Masa correctly was all over AI. And the team was small enough that we were all focused on the topic and looking around at what was interesting and being built in the world of AI. And we came across OpenAI, we knew OpenAI, we had discussions about OpenAI, and we just didn't do it. I think that was a huge miss. That would have been incredible. And I think part of the fear was they're trying to build so much. And sometimes you have to build everything. There are industries or markets that are thin protocol markets, meaning there's just not a lot of infrastructure. And so the company has to do a lot of the work that's just not existing in the ecosystem. That's true in LATAM, by the way. A lot of industries in LATAM are thin protocol industries. There's just nothing. And so a company has to do a lot. And often that turns investors off because you say this is very operationally intensive or capital intensive or what have you. But you need that to create the business. And it's a business that's more likely to endure.
So those are ones that we miss. I'll tell you one that we did. That was a terrible miss. And that was FTX. And I did that myself at SoftBank. And it was one thing that probably taught me the best lesson ever.
Oh, fuck it. I've got to ask this. How was the meeting with Sam?
Do not, don't even want to tell you, but do not ever invest in things that you don't truly understand just because of FOMO. And I remember it was one day before, and Sam shared with me the list of all the investors. And I was very lucky, right? I had a tremendous amount of decision range within SoftBank. I can honestly say that my entire investment life, Masa never said no to any investment that I ever decided to do. And I went to Masa and said, Masa, I just cannot understand. What am I missing? Why is everybody investing? Are we going to be the only idiots who are not going to invest in this? And then Masa looked at me and said, it's your decision. So I invested $150 million on FTX, which, apologies to SoftBank, because I should have never made that investment, but it's probably one decision that has changed my life forever. I'm never going to invest in something that I don't truly understand, and I'm never going to invest based on what everybody else is investing. And that's going to be a great learning decision. That's going to be a great learning lesson for me of to never break those rules, right? And I broke the golden rule because I didn't want to be the only guy left, considering I was in charge of also doing crypto within or blockchain within the SoftBank ecosystem. Big miss, but a big lesson.
Can I ask a hard one, which is like, you're a very busy man. To understand an industry, sometimes you have to study it. The big challenge that I have is I run media companies as well. We do a lot, and our media teams are big now. I don't have time to study industries well enough to make an investment decision in a week. Do you? And if so, how do you do it?
We are lifelong learners, right? Like, I am bothered of my not so big knowledge within the AI ecosystem. So now I became a Harvard Executive Fellow, and I'm in charge of one of the biggest labs, which is the Digital Cube, the D-Cube lab at Harvard, which is the AI lab at Harvard. And I work very closely to always keep myself informed. And you're able to leverage an incredible ecosystem of incredibly intelligent people, Harvard, and be able to bring that knowledge into what I do for everyday living. If not, it would be impossible for me to try to learn it all myself. So now I wouldn't consider my expert, but I have pretty good knowledge of what is going on in the AI world. And you always have to find clever ways to be that. I tried to do that within blockchain, and it was so massive, and people weren't sharing information, and you were just investing in momentum. That is never going to happen. I'm never, ever going to invest into something that I don't have a good level of understanding.
And also Bitcoin go up. I mean,
no, now they say Bitcoin can go to $100,000 again. I don't know who, a very respected analyst.
Bitcoin go up.
I do find stature and success helps that learning, though. Like, you can pick up the phone to 99% of people in the world, 0.9%, and you will learn from the best. When I'm looking at a fintech deal, I'll call Mickey Malka and say, help me understand.
Yeah.
And he teaches you. I do find that is where success really
Isn't it amazing how highly successful people love to share?
Yeah.
Like, I have the same thing when I call Mickey, and not only Mickey, you can call, successful people are actually hungry to share.
Yeah. And
you would think they wouldn't, but I mean, that's why they write books. That's why they get in podcasts. That's why they do these sort of crazy things. And that's admirable of you that you're able to, that you actually call people to learn more.
Oh, 100%. I also think calling is a lost art.
Yeah.
Yeah. Penultimate one. What would you most like to change about the world of venture?
Speed. I think we've fetishized moving quickly, and it's just not that valuable, especially at the growth stage. But I think even at the early stage, the whole idea that I have an exploding term sheet, it's going to expire this Friday, first of all, is nonsense. Term sheets don't expire. It's just a made-up concept. That and the idea that you need to make a decision on limited information, you can't ask for anything else, those are cancers that came out of the zero interest rate regime. I think we just need to all calm down and make good decisions. It's better for founders if a process is a little slower. We're not talking about sclerotic, just a little slower, because their company will be diagnosed in a little more depth. They'll learn something along the way. They won't think raising money is just snapping a finger. It's much better for investors. So speed, that FOMO speed dynamic, I think, is a really awful trait of venture.
Marcelo, what would yours be?
I liked where we're going. I think the whole world got overly excited in the world of tech investing. You have crossover funds, you had corporates, you had everybody who suddenly became a tech investor. And a lot of people learned their lesson. And you have a lot of these funds who we all admire, who when you look at the true returns are truly disastrous. So I believe, and this is why I love my partnership with Shu, being an operator, you know how to operate business, you understand what it takes to scale, but there's an art of investing, right? So to me, operating is a science, investing is an art. If you can combine both, I think we're going to have something really, really special. And and I think the venture world is starting to shape up where all these people who thought that, hey, let me just mark up a term sheet, because I am betting that somebody's going to come and 6 months later put a higher valuation, and that's how we made our money. I mean, that was a Ponzi scheme. I mean, let's just face it. Now we're going to see who actually got caught in that. So fun times ahead. And a lot of things are going to get uncovered, and I think great investors are going to thrive.
Do you think so, though? Sorry, I'm just like, fund lives mean that actually it's a very difficult business to die. It's generally very opaque. LPs, bluntly, in a lot of cases, are quite lazy in their deployment. We've been with them for years. They're quite nice people. They host a good AGM. Yeah, we'll keep going. A lot of sins are covered. Do you think so?
I realize it's changing, and I love this, right? When you go to all these Middle Eastern conferences, before you used to see the top people of Silicon Valley raising money. Today you see the great founders there, which is great.
Going direct. Not DTC, DTF. All the LPs are going direct to founder.
Which I think is good, because there's going to be only very few funds that actually create value that are going to be able to raise money. And I'm talking the next 10 years. But the source of capital is getting incredibly smarter at an accelerated pace in terms of going after the best companies. And the best companies know that in many cases you can skip the intermediaries. And when you have so many intermediaries, right, I believe that the best will survive and the best will thrive. And that's what we're betting on.
And you're seeing really aggressive fund size targets not being met in real time. I'm not going to name them, but
sure.
We've all seen the news, like 90% below what they thought they would get. So it is changing. The funds do have long lives, and they'll last. The tail will be long. But I think we're past the excesses.
No, I totally agree with you. And I love the DTF. I've never heard that before.
Right.
I also find it quite
inspired in the moment.
Right here. I also find it quite interesting the way that quite a lot of people took a moral high ground around raising from the UAE, and now it's like everyone is there continuously. It's amazing how morals change.
To be clear, not all Middle Eastern money is the same. Right?
Totally.
UAE has not had.
I think Silicon Valley Tarded is the same.
Yeah, but that's another example of misunderstanding
a region.
Putting regions in one bucket. Latin America is this. The Middle East is this.
Final one. When we think about the next 5 years for you and for Bicycle, in a dream scenario, if everything goes to plan, like we asked founders, what could this be? If I ask you, what could Bicycle be? What would your answer be in a dream scenario over a 5-year period? Or a 10-year period? 5 years isn't too long.
10, not 5.
Let's do 10.
A high-quality firm whose decisions mean something to the rest of the ecosystem, whether it's founders or LPs or investors. If we make an investment, it means something.
I want to be what Sequoia China is to the Chinese entrepreneurs. I've had a chance to visit China, and the gold standard today is when you're part of the Sequoia China ecosystem. And we make no mistake, we went to visit Neil with Shu. We spent time with him. We spent a lot of time with entrepreneurs, and we asked him, what's a great fund for you? And 99% of them, the best ones, basically listed Sequoia China, and they gave us the list of services. So we have a very deep alliance with Sequoia China, and we'll say more Sequoia China with Neil Shen. And I like Neil a lot, and I respect him. And I think, we want to build something that is similar to that. We want to make sure we're relevant. We want to make sure that we don't miss the new banks. We want to make sure that in every single great company that is built in Latin America, we have had a role to play, either in the beginning, in the middle, or towards the end. And I think we have that opportunity because not a lot of people are in Latin America today.
I can't thank you enough, both of you, for coming on the show. Honestly, I've loved this. It shows like this where you realize why you're so lucky to do what you do, for me in particular. So thank you so much for this. And I cannot wait to see you build Bicycle.
Thank you.
Thank you.